Common mistakes by internal auditors. How to avoid sinking your audits. As if internal auditors didn't have enough work to do, we too often add needless work with thoughtless mistakes. This video explains 10 mistakes we have observed, each of which adds to our burdens and obstructs our success. Too many audit organizations engage writing consultants to train auditors in report writing while ignoring fundamental auditing mistakes that lead to flawed audit reports. We all know that writing skills are crucial to writing clear audit reports, but poor writing skills are not the only cause of muddled audit reports. The auditing mistakes described in this video need as much attention as writing skills. Too many internal auditors lack in-depth knowledge of the specific function they are auditing, whether it's procurement, maintenance, human resources, and so forth. Briefing yourself on the management function you will audit enables you to plan meaningful audit steps and analyze your data responsibly. Fumbling around in ignorance of your subject invites the overlooking of significant information, and it leads to incomplete or useless audit results. Too many audit plans contain steps that do not relate to the audit objective, and too many don't contain steps that do relate to the audit objective. These flaws result directly from not keeping the audit objective in mind while making the audit plan. The worst of these mistakes is using an old audit plan to save time. Old audit plans don't automatically apply to your current audit in all respects, and they might have been inadequate for the prior audit. How do you know? Every audit step must contribute to your answering the question posed by your audit objective, and every audit plan must include all the steps necessary for answering that fundamental question. Some audits are fishing expeditions that search until smelly fish are found. That approach wastes resources and time. Successful fishermen, those who gather the most fish and win the tournaments, go fishing where the fish swim. Don't include blanket audit steps that go looking everywhere for trouble. Plan audit steps that look specifically where you are likely to find answers to the questions posed by your audit objective. Drifting outside the audit objective is too enticing to auditors and sometimes to their managers. We're already there, they reason, so let's go ahead and audit it. That violation of fundamental auditing procedures directs attention from your stated task, which is answering the question posed by the audit objective. It also leads to unfocused audit reports, and it wastes your time and everyone else's. Stay focused on your audit objective and the steps laid out in your audit plan. If you find issues unrelated to your audit objective, a separate audit focused on that issue should be conducted. Many internal auditors don't clearly understand the formula for their finding elements of criteria, condition, cause, effect, and recommendation. This weakness leads to confused reports that don't clearly explain the findings and fail to recommend sound corrective actions. If you are unsure about finding elements and the finding formula, get training or train yourself in this crucial auditing skill. We are shocked by the number of internal auditors who don't clearly understand internal controls, particularly what they do and don't do. Internal auditors with clear and thorough understandings of internal controls can audit anything successfully. They are looking directly at what management should be doing and what they are doing. If you are unsure of internal controls, get training or train yourself in this crucial auditing skill. Auditors who research, interview, collect evidence, and write working papers with no inkling of how their finding is shaping up are operating in a vacuum. This approach risks developing incoherent and incomplete findings. It also costs them valuable time in developing their findings and writing their reports. Auditors should always know how their findings are developing during their research phases. Some auditors and their bosses try to get something from their auditing efforts by forcing findings where there are none or where there is nothing worth reporting. Auditors must always keep materiality and risk in mind while auditing. Materiality means affecting decisions or outcomes. If the issues don't affect decisions or outcomes, they are not reportable. Risk means the potential for losing something of value. If that potential is not material, it is not worth reporting. When auditors have such findings, they are wise to issue unqualified, clean reports and move on to the next audit. Far too many auditors start writing their reports after completing their research. This mistake results from the false notion that so-called audit work and reporting are distinct functions to be performed separately. Quality audit reports cannot be issued on time using this approach. As auditors gather evidence, they can see how their findings are shaping up. They can and should start drafting their reports during this phase. Then they will have a basic foundation of their report written when the research phase is completed. Enjoy your successful auditing.